Our top story today is this bombshell announcement from Tesla CEO Elon Musk about possibly taking the company private. He made it on Twitter, no less. This announcement shocking investors, and it's now got the attention of the Securities and Exchange Commission. Art Hogan, Chief Market Strategist at B. Riley FBR, is with us. Art, good morning.
Good morning, Cheryl.
Well, the big question here from the SEC, according to multiple sources, including the Wall Street Journal, was this statement misleading or false to investors? Wouldn't he have paperwork to back up if he had secured financing? Wouldn't that be pretty easy for the SEC to find?
Yeah, typically that's the way things are done, but obviously the way things are done in Elon Musk's universe are a little unorthodox. So I think what the SEC is looking at is three things. I think first and foremost, now I guess it's okay to disseminate material news on social media. Reed Hastings set that precedent a couple of years ago on Facebook. So since that's okay, then since this is a new format, we have to break down what the message is. And the message is really an enigma here because I'm thinking I'm thinking about having bacon for breakfast. So that's not very specific. But then taking Tesla private at $420, that's very specific. And then funding secured.
And he made the announcement during market hours, and it moved the stock to the upside. I want you to listen to what Harvey Pitt said on Cavuto Coast to Coast yesterday about this exact timing of the announcement.
Announcements of this kind move markets, as we saw, and they are made either before the opening of the market or after the close. He did not do that. Second, he personally cannot secure a going private transaction.
What do you make of that, Art?
Yeah, Harvey Pitt's right, and that's certainly true historically, right? You have market-breaking news. At the very least, you contact the exchange and say, "Hey, please, let's halt trading for news dissemination," and that would be the traditional way to do this, as opposed to coming out and dropping a bomb on the world from a guy who has tweeted in the past that he doesn't like short sellers. So clearly, this is an unorthodox CEO. He's really going out on a limb here, and if there is no way to prove that he's got funding secured, as he says, then that's where the SEC probably has the biggest case.
And they will.
And obviously that's
right.
And they will. Yeah, that's something you can prove or you can't.
I think they're going to find out pretty quick. I think they're going to find out pretty quick. Hey, I want to ask you about, there's something interesting I found. Next March, they've got a $920 million convertible bonds, $920 million in convertible bonds that is due. That is a huge, and the conversion rate is for the stock price is $359. So the stock is below that. He's got a major problem. Could this be why he's one of the reasons he's trying to go private, next to the fact he can't stand the analyst community?
Well, yes and no. I think if, the 420 sort of, rumor pushes the stock up above that conversion price, that can actually convert. He doesn't have to make that settlement. Now he's got more equity that he can have flow into the, instead of public equity, flow into the private equity. So, all of that might be part of this, grand illusion or great concept of actually getting out of the public eye and being able to run this business without having to talk to analysts and investors every 3 months. So, I'm not exactly sure what the drivers are here. I just know that this is a CEO that would like to be out of the public eye, not have to answer questions, and make a better world. Unfortunately, he started out as a public company. It's very hard to unwind that, and he's at a growth phase where he really needs access to capital markets. They're burning $1 billion a year, so they need more money on a regular basis. Hard to do that when you're private.
And it's been pointed out several times in our network already, Art, that going public actually benefited him and shareholders and the company. That's where they've been getting more cash, anyway, which they're burning through like crazy. Art, it was great to have you on this topic this morning. It's good to see you, sir.
Good to see you.